Hey, what's up, everybody? It is Thursday. Tomorrow is the U.S. jobs report. I want to let everybody know that I have sent out my forecast for non-farm payrolls. As you may recall, last month I hit it right on the head. I think I was off by like 2,000. I think the number was 198. I came in at 200,000. The consensus was way off. They were way wrong. Actually, they had the number coming in weak. I had it coming in stronger than expected. The market reaction was exactly as I predicted based on my forecast. So it's really important that you get this. I sent it out to all my subscribers, including the Zombie Trading subscribers and of course MMT Trader subscribers. If you want to get a copy of my forecast, if you want that number, because that is a tradable number that triggers market moves, go to my website, pitbulleconomics.com, sign up for a 30-day free trial of either MMT Trader or Zombie Trading, but do it quick because you want to get it tonight to prepare yourself for the morning when that number is released. All right. So yesterday we had the conclusion of the Fed meeting. We had basically Fed talking about strengthening the economy, strengthening the labor market. Apparently there was expectation for a rate cut or talk of a rate cut when the Fed threw water on that idea, basically saying they're going to stay patient and look at the incoming data to decide what their next move is. That's basically what they've been saying for a long time now. Then we had the reaction. Stocks sold off, the dollar went up, bonds sold off. We are coming into a very interesting period right now from the beginning right now in May through until about the mid-June period where we are going to see a rebuilding of bank reserves. Remember, I follow these flows, not just the fiscal flows. Of course, the fiscal flows are the underpinning of everything. But these movements of reserve balances into the banking system and out of the banking system, that's a tradable phenomenon. That's something that causes reaction. Banks have to make adjustments based on those flows, and it's something that is knowable. I mean, we know what they're going to do based on those flows. So this is a completely tradable phenomenon. It happens with regularity, almost like, if you could think, a way to think of it, and I think a good analogy would be the tides coming in and out in the ocean. Every 6 hours, tide goes out, tide comes in, tide goes out, tide goes out. Same thing with these reserve flows. They come into the banking system from government spending. Then there's taxation. They come out of the banking system. The Fed, of course, is involved in this as it has been reducing its balance sheet. And by the way, that is going to be winding down and coming to an end by September. So that's a factor. But this is a tradable pattern if you understand it. And I guarantee that everyone else out there does not understand it. They don't pay attention to it. Now, the banks react to this just as a matter of keeping their asset mix where they need to have it based on regulatory needs and other factors. So they react just operationally, they react to these flows, and we know how they are going to react. So we position ourselves ahead of these movements in and out of the banking system with these reserve balances. And you're talking about billions, tens of billions, hundreds of billions. It is a very, very powerful, this movement back and forth. Think of it, like I said, just like the tides coming in and out. Totally predictable. Totally predictable. So that is a major, major advantage that we have over everybody else. I'm telling you right now, nobody pays attention to this. Nobody understands this. As a matter of fact, I would even go on to say that people who do pay attention to this have the wrong understanding of it. So that's another group whose pockets we can pick. Amazing. Really amazing. The oil pullback, let me talk about that for a second. And yesterday, by the way, I sent out an email to my subscribers saying oil is going down. I saw the EIA report. We had another bearish week in that EIA report, not just from inventories, but you saw it in demand, you saw it in exports, you saw it in imports. So we got out or got short ahead of that. I'm a little bit skeptical about the magnitude to which oil is going to decline. I see a little bit more room on the downside. But don't forget, today, that's the end of the Iran waivers, okay? Countries are not allowed to buy oil from Iran or risk punishment and sanctions by the United States government. That, I don't think, is being factored in at the moment. This is technical selling. This is zombie selling. And also, we are entering into a period now for, I would say, the next 5 months, 4 or 5 months, where seasonally we see weekly drawdowns in crude. So some bullish factors coming together, I think, which could set up a pretty good buying opportunity here. But I still see a little bit more downside in the short term. Zombie selling, liquidation, whatever you want to call it. Dollar index may again go up and retest the recent highs. I think we got up to 98.33. Remember, 97.87 was the 61.8% Fibonacci retracement of the move from the high in January 2017 to the low in February 2018. So this is a 61.8% retracement. We pulled back. We went slightly above there. Of course, you clean out the stops, and then we came back down again. Let's see what happened. So yeah, if you want to get my forecast for tomorrow's job number, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial for either MMT Trader or Zombie Trading. See everybody tomorrow. Bye-bye.